Good morning from Los Angeles. Good morning. It's Friday. It's Red Hat Opex Friday. Welcome to Power Hour, 10 a.m. Pacific, 1 p.m. Eastern, every Friday. Thank you for joining me. Um, what's going on today? Well, here's what's going on. You guys are all seeing the market green today. Okay. I was up late doing some other stuff, working on some stuff in my quiet office, and I always have uh, the futures market on one side of one of my screens. And what I saw was quite different than what you guys are seeing now. In fact, it was so bad. Let me give you guys some perspective on this. When I was up at 2 a.m. Pacific time, which again I was up at 5:30 after 3 hours of sleep, because that's the life of a trader. I've been doing this for 35 years. I think I get up about 5:30 every morning. My routine anyway. Make me a cup of coffee, go out in my backyard, take some fresh air, wake up, and get ready for the battle. Now, what I saw yesterday was S&P futures were down 90 handles, 90, 1.5% range. And NASDAQ futures were down 400 handles. And when you see that, now you have adrenaline going through your system. 2 a.m., exhausted, already woke up at 5:30 in the morning the previous day and traded it. So, and then I take a look at crypto. Bitcoin is about to make a lower low at 105. Ethereum is at 3,700. Solana is about 174. And I do have positions with these. Like I have SBET, I have DFDV, and I'm going like, okay, what do I add to? Do I close some, take my hit? Because for all the friends I've made over X, I don't know, friends or enemies over the past couple of weeks, putting out videos about chopsticks. People go do chopstick analysis on look, I can read a chart as well as anyone on X or anywhere on the globe. Well, when these folks start drawing lines on BMNR and SBET, and I'm like, is this really a person with 30, 40, 50, 100,000 followers on X that actually knows what the F he's talking or she's talking about? When they do just chopstick analysis, it irks me. It really just gives me more adrenaline to just push back and say, hey, you dumbass, you do not draw chopsticks from BMNR and make sense of any of it, or Sharpling, SBET, or DFDV, or Solana, or whatever. You can technically analyze these things, but they move with the underlying. The underlying is the token itself, is Bitcoin, is Ethereum, is Solana. Okay, the top three. And when they continue doing this, how's that service to their communities of hundreds of thousands of people on X? How can you fundamentally analyze the Tom Lee company, BMNR? How can you? You can't. This is not NVIDIA. This is not AMD. This is not Google. This is not Apple. They don't have a product that they produce. All they do is raise money and buy tokens. That's why they're called digital asset treasury companies. So in all of this, I'm like, okay, 2 a.m., S&P futures down 90 handles. NASDAQ down 400. On Thinkorswim, that's the platform I use. They're already live quotes. I can start trading at 4. And I'm looking at some of these prices and I'm going like, whoa, we're going to have a Black Friday. Not the retail sales kind, but a Black Friday, and usually Black Fridays coinciding with Opex. I'm going like, Opex meaning option expiration. I go like, okay, this is not going to be a good day. And I'm red today, obviously, because I mean, I'm with minimal positions. I'm having a drawdown of 10% from my all-time equity high. I'm already seeing some folks on Twitter. These were the same people who were going like, oh, look, my account just hit 1 million. With the stock market just pulling back 2%, not even from all-time highs, their accounts are down 20% already. What is happening? This is not normal. Like, I have a video coming out at noon today. Go check it out. This is not normal. I've seen all of this, all of it. I've been through how many crashes? I forgot to count. Definitely more than a handful. So I'm like, okay, it's 2 a.m. Do I stay up, chug a monster, and start trading? Then I'm like, why? Market's so wild that what am I chasing here, right? So that's when good traders go, let's just sit on my hands. My account is literally 90% cash at the moment. It was like that. But even with that, even with minimal positions I have, I'm experiencing a drawdown because these stocks are moving so wildly. Okay. We'll talk about quantum, what I did. Actually, I made my money back. I was short Rigetti, actual shares covered, took a loss, 10K loss, then got into RGTZ and made probably 70-80% of it back. But stock like HIMS, let's say today, they're just getting taken out in the back and getting shot after making a reaction high at 62 a couple of days ago. We're at 50. Look, this is not normal. Okay, stocks don't move like this. Although VIX has pumped up to 24, 25, individual stock volatility is so much more higher than the index volatility itself. And even if you were to hedge yourself unless you do the futures, but even if you do the futures, look where we are. By the time the market opened, we were unchanged. 90 handles were recovered, 400 points on NASDAQ was recovered. From red to green. How does that work? That's because markets are thin. Maybe there's not much liquidity overnight. I get it. But the point again, the stocks, indexes, stocks don't move like this. There is something going on that I'm trying to put my finger on, but it just doesn't make sense. So when it doesn't make sense, great traders know how to sit on their hands. You just sit. It's okay. Let it come to you as opposed to you chasing something. Because we're all, not me, but and hopefully not my group, but these newbies are all so pumped up that they must do something every day. No, man, you just sit. You let it come to you. And if it doesn't come to you, don't trade. You don't have to. I'm a swing trader. I'm not a day trader. Thank God. I tried it. I don't think anybody can be successful day trading because the odds are against you. So how's that? Math is pretty simple. I mean, you can't argue with math. You can argue with me, but you cannot argue with math. Yeah, you'll have a couple of good weeks and then one big, tweet and you're on the wrong side. By the time you get stopped out, by the time you reverse, by the time you do that, you got your face ripped and you're gone. Account's blown. So 54% of the time, on a daily basis, the market is green. 54% of the time. Okay. This is facts. You can go Google it, Gemini it, Grok it, whatever you want to do. Take the commissions out, take the slippage out. That's the difference between bid and ask. For all those day trades you're doing, you're at 50-50 day trading. It's a coin flip. I don't like coin flips. So I swing trade, I position trade. But again and again, When you up at 2 in the morning and you see SPX down 90 handles and NASDAQ down 400, you're getting ready for a bloodbath, right? And I do have positions that would have gotten hurt, but it's actually they are getting hurt. God forbid. What would have happened if we open down 90 and go down 180 on SPX? There's a possibility, you know. These recoveries are all happening, and people are just getting very comfortable with buying the dip and getting used to it. It's all good. But my point in all of this is I don't want to chase return. I don't have to. And, you know, put the position on when it's there, not because you're bored, not because you have to do something, not because, okay, you from your all-time high, market's down 2%, but your account's down 20% already. You know what that means? That means you're oversized. That means you're leveraged, most likely. And so what will happen to that account if market really sells off? Maybe market sells off 10%, which is normal. Garden variety sell-off. If you're down 20% with 2% from all-time highs, what's going to happen to your account? Because you're holding, right? You just go, okay, the one day it'll go back up. And then it doesn't. And then it goes down another 10%, down 20%. That account will just go down half or more. And after that now, you need to pray to market gods to save your ass again and again. But the math, again, is against you. If you have $1 million account goes down to 500,000, you're so committed and you're so convinced that the stocks you're holding are going to take you to promised land. Okay. So your account goes down 50%, which it did in April. A lot of accounts went down 50, 75%. Because these stocks are wild. They're 2, 3, 4 beta stocks. Okay. Now what? If your account goes down 50%, your account has to go up 100% to just get back to where you were, to back to even. Okay, that's math. Math is math. But then again and again for the last 30 years, market has saved folks. They're just, you know, and the prices that they have put on these stocks. Okay, quantum computing and AI stocks and some of these no-name stocks. They go up 10, 20% every day. Okay. Some of these things don't even have revenue. And then again, goes back to, okay, I have two choices. Well, maybe three. But the two are you participate or you sit, right? You definitely don't go short. I tried twice. Once I made money on Rigetti, once I got my face ripped, and then I made money again. So overall, I'm probably even. But if you know, fundamentals are out of the window. Common sense is out of the window. There's just none of this makes sense. Okay. If you're a fundamental value trader, let's say, which you shouldn't be, momentum is a powerful thing. You got to catch it when you catch it. Then what? Okay, so for example, an IONQ or Rigetti goes from 60 cents to $58 in less than 6 months. Is there room to make money on the upside? For sure. But then if you're thinking fundamentals, I don't know what kind of crack you need to smoke saying that quantum computing is the future. I don't think it is. But let's look at fundamentals. Okay. First of all, you have to believe that profits, earnings, revenue is still an important metric to look at. Right? It is. The reason NVIDIA have done so well because their revenue is there and the top line is growing. Bottom line is just full of cash and cash machine, throwing free cash flow. These are important things when you look at a stock. So when you look at a stock like Oklo, okay, AI, there's going to be massive power demand for AI. Okay, cool. What does Oklo do? They do small nuclear power generators. Basically, in every AI data center right next door or within it, there may be one of these little nuclear reactors that provides all the power, so we don't have to suck the grid dry. Okay. Stock is $3 at the start of the year and just hits 190. At 190, you put a $30 billion market cap on a company that has not built a single one of these things yet. I fully understand that stocks move, the price moves first and earnings catch up. That's a given. That's rule number one. And most stocks, by the way, don't go up every day. What they do is they go up, they consolidate, earnings will catch up, next leg will come up, next leg will come up. But as long as the earnings are coming, as long as the fundamentals are supporting the price, okay? And we have the reverse of that with, let's say, Lululemons or Nikes or UPS or PayPal or things like that. Okay. Well, when you take a stock like Oklo, who basically just has a drawing, I get it. Their CEO is now the energy secretary for Trump. I get it. Okay. Yeah, they may get some contracts. Okay. But when you put a $30 billion valuation on that company, how much of the future revenue and earnings are we considering into that price? That's how Wall Street works. You can ask every fundamental sell-side analyst. I've dealt with them when I was on the desk for 25 years. How's that work? What are we pricing in here? We're pricing in perfection plus, 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 plus. We're pricing in growth plus, plus, plus. This company has a drawing, has the patents for this little nuclear plant, mini plant. That's one. Quantum computing, same thing. Company like IONQ. Zero, well, maybe a little bit of revenue, maybe $5 million. You know, I have changed my attitude about how to analyze things fundamentally over the years, such as analysts as well, because, you know, TP ratios, CAGRs, and, you know, all these things, you know, PEG ratio, those are all out of the window. Because what happened is that we started analyzing companies for growth only, and again, growth analysis has become price to sales now, because that's why everybody calls Palantir expensive. Okay. So if Palantir is expensive at 300 times sales, this is 300 times sales. We're not talking earnings, PE. Where's Oklo? Where's IONQ? Where's Rigetti? There's no revenue. How am I even supposed to put a price to sales on this thing? So that's where we are. That's where the market's at. It's frustrating because I've seen the other side of the coin many times. On those names, I definitely think or agree with the X crowd that there is similarities between the dot-com bubble and today, for sure. Because that's what was going on. In fact, today's video title is called The Greater Fool Theory. What's the greater fool theory? You buy something today, you hope another fool, you're a fool for buying it, but another fool is going to buy from you at a higher price tomorrow. That's the greater fool theory. Again, I'm not bearish on the market. I'm just, but in individual names, and they have become the talk of the town, right? But there's 8,000 stocks, 10,000 stocks out there. You can make your money by doing other things with other stuff. You don't need to participate in this, because if you do participate and a day like yesterday shows up, right? When these stocks from their highs already are down 20%. And that's why these folks' accounts are down 20%, because they're all loaded with these stocks. The way up is fun. The way down is also going to be painful. So that's all I'm trying to say. That's all I'm trying to warn. That's all I'm trying to, you know, communicate to my chat group on Telegram, my members group. You know, a couple of them are involved in HIMS. I can't touch that stock. I just can't. And a couple of them has short puts expiring today. on the 2X ETF, and that thing was like 23 yesterday, and it's getting close to 15, and they have 15 puts that are expiring today. It's wild. Stuff is wild. Anyway, good morning. Good morning. Welcome to Power Hour every Friday, 10 a.m. Pacific, 1 p.m. Eastern. Let's take care of some business. Every Monday, Trading with Sergio, 10 a.m. Pacific, 1 p.m. Eastern. Every Wednesday, Trading with Sergio, 10 a.m. Pacific, 1 p.m. Eastern. And every Wednesday, 4:30 p.m. Pacific, members only live. We had a really good session on Wednesday. We even had an emergency session on Sunday. That's how much I take care of these folks. And today is Opex. And who knows what's going to happen. So I'm just kind of sitting with minimal positions. I'm having a 10% drawdown from my account, hit an equity all-time high literally like a week ago, with literally minimal positions. But I'm in SBET, right? I'll show you guys the positions in a minute. I was in DFDV. I thought I was doing a cash grab. Solana goes from 225 to 170, and close the position with a loss. Okay, well, you got to take losses. I mean, I'm not against any of that stuff. And I'm full transparency. By the way, I post all my positions Monday, Wednesday, Friday on the community page of the YouTube channel. And I post it for my members. And what do you get for being a member? You get my transactions live, none of this trading, financial, or investment advice. What I do is very risky. Do your own due diligence, obviously. But they're learning. They're learning a lot. I'm giving them all the tools to have success. Now, what they do with it is up to them. But I'm trying my best to inform and educate. And I like my group. It's small, about 40 people, but we're tight. We have fun. And, like last night, okay, we're just chatting. I was looking at the gold chart, and I'm like, that's kind of a little too much, too crazy. So I go, why don't we just go buy some puts at the open? And we would have bought the puts if DUST, which is the 2X inverse ETF of NUGT, had opened unchanged. I put up 150 lots orders, scaling in, never got it. And then what happens to Dust? Dust literally goes down 30 points. They would have doubled already. So some trades you miss, you don't get upset. You always look forward. You trade, man. You trade what's in front of you. Investing is different. Trading is different. But the market is, market is the best pricing mechanism out there. You can argue with the price, which a lot of folks do. They go like, oh, that's so expensive. I'm like, no, that's what the market's telling you what it is. You don't have to create personal biases for that. I agree with you. It's too expensive, but then going and shorting an Oklo it was expensive at 50. It was more expensive at 80, more expensive at 110, more expensive at 150, more expensive at 190. How do you deal with that, right? You just maybe sit then, or you just participate, join the crowd, join the YOLO crowd. Anyway, so good morning to everyone. Let's see who's here. Doug, good morning. I hope you survived HIMS. I think you did, though. I think you bought him back. Good morning, SJ. Josh, hey, good morning. See, that's what we want to do. We want to inform, educate, teach. You'll learn, man. It's not an easy thing to do. You just need to have patience. You have to have the 3 Ps, right? You have to have patience. You have to have position size correctly. You have to have a plan. And when the price gets there with your patience, patiently waiting for something to get there, then you execute. And then it's up to, again, there's no guarantees, but all of us are trying to look out for probabilities. I'm never going to look out for the market to come back and save my ass. I'm going to take my loss. So if I'm wrong, I'm wrong, right? And then a lot of people care a lot about win rate. Win rate. What's my win rate? You know what my win rate is this year, folks? It's 54%. I was almost at a double in my trading account. It's a 6-figure account. So now what? How can I double my account at 54%? How? Not possible, right? Impossible. Oh, it's very possible. You take small losses and you get your winner's run. That's how you do it. I don't know. That's the way I look at it. Muted. It says I'm with you. I don't know why you're with me there, but I appreciate the support. Good morning, George. George says 2026 is going to humble. It already has. Look, nobody. I mean, I really put out a really good video talking about history. Okay, I'm a market history buff. In fact, I put like a trivia question. What was the first amazing global and U.S. short squeeze? Because that's what's happening on. That's what happened on Oklo. That's what's going on with the quantum computing stocks and AI stocks. A couple of them got it. One was Volkswagen, obviously. We know what happened there. And then the other one was about 20 years ago. I remember distinctly. It was a company called LA Gear. I think they're still around. They're like the Nike competitor. I think that stock went from 1 to 40. It's like GME type squeeze, short squeeze, gamma squeeze, whatever you want to call it. They didn't get that one. Even if you Gemini it or Google it, they don't know either because I lived it. So these short squeezes, man, they're brutal. Shorting, I love shorting things, but if you're on the wrong side, and going back a little bit more on your comment, none of these people, all these YOLOers, all these Robin Hood, YOLOers, again, no disrespect to anybody, I just call them that. So they only started at 2020 because they're all sitting at home and during COVID, right? Government sending you the checks, just put it into a Robinhood account and swing some options. And then they did the AMC and Bed Bath and Beyond, and of course GME, right? Some made ridiculous amount of money, some lost everything. Ultimately, they all lost. Their bag holders, all of them. Look, where is GME today? Okay. The point again I'm trying to make is these things are fun when they're doing this. But if you do not step off the train, you're going to crash. And that's the key to trading, right? A lot of people go buy low, sell high. No, I don't subscribe to that. It's just buy high, sell higher. That works. But 2026, this year already did it, but then market came back and saved their ass, right? In April, Liberation Day, tariff musical chairs, which is still going on, by the way. We have November 1 deadline with China. I don't know. There's going to be more volatility, I'm sure. But what happened in April? I had a drawdown of about 14%, and market went down 25%. I saw accounts that were down 50, 60, 70%. But then they were all in what? They were all in SoFi, they were all in Palantir, they were all in NVIDIA, they were all in whatever. Some of these crazy names, right? And then what those crazy names do, they got crazier. And market not only came back and saved their ass, it just gave them more, greater fool theory ammunition. And look, market's going to do what it's going to do, but market's the best mechanism. Market's going to try to make everybody wrong. The longs, the shorts, shakeouts, all that good stuff. I've seen it all. I've seen shit, man. I go back. I've seen the 94 UIL crash, mini crash. I was around. I wasn't on the desk, but I was around in 79, 78, 79 crash. That was a crash. But then everything is different, right? The mechanics are different. The market structure is different. We have a Fed that we have an attitude in this country too big to fail, right? Which proved itself in 2000. Look, in 2000, look at the dot-com history. NASDAQ went from 5,000 to 1,000. That's the index. What do you think a lot of stocks did in there? I remember Amazon being at $6 before all these splits. So and that's not that long ago. That's only 25 years ago. So you need to pay attention to history. And then in 2008, GFC, I was short a lot of these secondary banks, California banks like Countrywides, mortgage underwriters. Washington Mutual and Wachovia. Where are those banks? Or Bear Stearns and Lehman Brothers. We all know, right? Okay. Study history. It will happen. It could happen. In fact, last 2 days, it's been kind of going on with the regional banks. Massive sell-off. I mean, massive. And for that, when my members ask me, like, well, what's happening? I'm like, go to Fred. Go to Federal Reserve Economic Data. Go look at it. It's all there. Macro. All the macro stuff you can absorb is there. Everything you can imagine. Well, why? Regional banks have a lot of exposure to a lot of loans, specifically car loans. I mean, look at the data. In prime and non-prime, car loan defaults are at a 2008 high. Same thing is happening now. Mortgages are doing the same thing. Credit card defaults are going through the roof. Look at it. And but our economy is 80% or 75% GDP is consumer spending. We love plastic crack. If we don't spend, we're a spender society. If we don't spend, what happens to the economy? And last but not least, why is the Fed cutting rates while all asset classes are at an all-time high? That's because they're seeing the trouble ahead. Unemployment's ticking up, specifically in the college graduate level. Unemployment is 2x of the national level. These people can't get a job, and AI is not even here yet. They've gone to college, they come out with $200,000 shackle and ball on their ankles called student loans. And now what? So, yeah, the market's going to do what it needs to do. And, I never question the market. I never am stupid enough to say, oh, I know better. You don't know anything. Market doesn't give a shit who you are. Market doesn't give a shit how much education you have. Market doesn't give a rat's ass how much money you have. As we know, hedge funds do get blown off once in a while. But yeah, I mean, look, you do your best with what you know, what you're comfortable with, and then you move forward. But yeah, I think 2026 is going to be a little bit of a rough year, especially I think during midterm elections. And this guy's always printing, man. I haven't seen him say one time he's lost money. That's a good question. Not necessarily. No, I'm not going to. I don't have a bias about Bitcoin. I think I DCA Bitcoin every Monday. I bought my first Bitcoin in 2020. Didn't buy anything. Then I studied it quite well. Not listening just to Michael Saylor, but study it for yourself. It's the only finite asset. Look, I talked about this on my channel a million times. We know what's happening to the US dollar. US dollar has lost 10% of its value this year. That's how much buying power you have lost. Over the last 5 years, US dollar has lost probably 6 to 8% a year of its value. And that's another beef I have with the government. When the government says, oh, inflation is 2.5%. It's not 2.5%. It's a lot higher than that. Nominally, it's the same $100 bill, but it's buying a lot less. So BTC, I figured, is my only... Well, no, there's other things. I have real estate. I have gold. I trade. I have an investment account. I'm trying to spread the wealth. So I figured out, though, long time ago, the rich are getting richer because they accumulate hard assets, right? Land, real estate. And if you look at the real estate prices, if you look at gold, if you look at Bitcoin, they all have kept pace with inflation. So not necessarily. The greater fool theory is more in the individual stocks that don't belong. They're not worth the paper they're printed on, but it happens. Bitcoin has some value as a holder of value, let's say. I'm not going to call it digital gold because I don't think it is. But more so Ethereum now has, I think, value. And not because, again, Tom Lee's doing it. He's the GOAT, whatever, but I'm not buying what I'm doing. I'm not buying SBET because Tom Lee says Ethereum is great. And I'm like, no. But I do understand the concept. So I don't think BTC is greater fool theory. I don't think so. But also, I don't think BTC is ready for prime time. What happened last Friday? Right? What happened? You had a candle, people call it. I don't look at candlesticks, but I look at bar charts, old timers. We had a 20% bar. That shouldn't happen to a consistently solid asset. It shouldn't have that kind of volatility in one single bar, daily bar. It was 115 high, 105 low. That's 20%. So maybe it's not ready for prime time. Now, does Bitcoin have other some utilitarian tools? No, it's just holder of value, right? And look, overall, what has Bitcoin done? It has outpaced. If you were in Bitcoin, you would have kept pace with the gaslit information that you get from the government, right? And you save your butt. Real estate, same thing. Same thing. My house has doubled in price since I've been in here in 22 years, but it's 4.5% a year. Well, that's just keeping pace with inflation. Same thing. Gold actually has done the best, last with exception today, probably. But we're at 4,400. All these hard assets are all-time highs. There's reasons for that, obviously. One of the reasons is we just look at global M2, look at US M2, look at money supply. All we do is just print and dump it in there. Government says, oh, we're going to cut QT. What QT? Quantitative tightening didn't even happen to a point, really. I mean, we had a little bit of a shakeup when the Fed went from ZERP, which were very late because they got the inflation genie out of the bottle. Now they're trying to stick it back. It's never going to go back in. But then now they're cutting rates. Why? They're seeing trouble ahead. And the market has not at all priced in slowdown, recession, forget about it. Market has not priced any of this in. And when it does, that's when in 2026, a lot of novice traders are going to get absolutely smashed. That's not my wish, but then you have to have the tools to figure all this stuff out. Gabrielle. I'm a part of this generation that has never experienced real correction. Yes. It depends on your age. Look, if you're a trader, being 100% cash is just, you're losing value on your cash. Like I said, 10% a year or 7% a year. So, by the way, if you are a trader, you should have a benchmark to not other folks, not some Twitter, whatever, or some Robinhood YOLOers. Your benchmark should be an index. So mine is S&P 500. If you're a trader and if you're not getting 5x on the benchmark, you should not be trading, because trading involves short-term capital gains taxes, which is on your ordinary income tax rate. In California, where I'm at, it's close to 50%. So if you get, let's say, 5x, let's say 50% on your trading account, which is great. But after you pay your taxes, there's slippage, there's commissions, there's other expenses. If you get on a net basis, if you end up 2x of the index, okay, you had a good year because you took all your, and then factor in the 10% of, dollar devaluation, right? So then after all the expenses, all the taxes, and all the dollar debasing and devaluation you're experiencing in real life, if you're at 2x, let's say 2.5x of the benchmark, you did great. But 100% cash, I don't know. There's always something to do. Look, I'm not going to deny that. There's always something to do. Investor is a different story. I mean, I have an investment account. I have 4 stocks in there. I'm about to add UPS in there reluctantly, but we'll see. I traded in and out of one, which I don't like to, because investment account, you should always aim for long-term capital gains, which are at 19%. And I'm not a tax advisor, so don't take my word for it, but I think I'm correct on that. And you should just pay attention to that. But then investing has become also this I mean, if you want to double your account as an investor, you had chances, many chances. You had SoFi's, you had Palantirs, you had NVIDIA's, you had all these stocks, right? Some have merit, some have zero, none. But if you caught the wave, which you should have last 2 months, 3 months, but then you're falling into the trader category, because now you have capital gain, short-term capital gains taxes, which are taxed at your ordinary income rate. So, you got to figure all these things out. I don't think people figure any of this out. But anyway, so. Okay, Gabriel says, I decided to take a wait-and-see approach. No, the positive correlation is actually a good thing. Well, not a good thing, but you have to ask why. Why is this happening? Okay, I highly urge you, Gabriel, and all of you here, to go Google. You all have some sort of large language model on your phones. Go ask GPT or Grok or Gemini, give me a chart of the global M2. Global M2 is global money supply. And then ask him, give me a chart of US money supply, US M2. And then ask it to extrapolate the S&P 500 chart or the Bitcoin chart or the gold chart on top of, or superimpose it on top of the M2 chart. You guys will be really amazed the correlation, because the correlation is there. Correlation is not between the asset classes. Correlation is between the money supply and the asset classes. Every time money supply shrinks, we have a correction. Money supply just made an all-time high globally and in the US. Although the Fed says we're in QT, quantitative tightening. Like, bullshit. They're such gaslighters. It's just like, it just kills me. It's like, they go, oh, inflation is 2%. What? Seriously, folks, how many of your daily life expenses have only gone up 2% this year? Which one? Because you know why that is? Because the inflation basket that they look at has stuff that a normal person does not buy. If you're renting, how much have your rent gone up last 5 years? If you have health insurance through yourself, how much are you paying for it? Your car insurance, your water and power bill, your transportation costs, your fixing your car, put all these things that we deal with every day. Your food costs. I mean, you go to McDonald's today, a Happy Meal is like, I don't know how much, not a Happy Meal. What do you call that? The Big Mac meal, let's say. It's like $20 almost. That's not inflation? Where is that in the basket? No. Oh, it's 2.5%. Oh, it's fantastic. They're just gaslighting you, man. That's why you got to think on your own. You got to invest. You have to invest. Honestly, I don't think they can allow this musical chairs to end, because there is literally one chair and there's 9 people in the room. If the music ends, 8 people are going to die. So I'm going like, can they afford to let it end at this time? Because they had a chance in 2008. I was live trading. I knew what was going on. In fact, I had just had a mortgage company for 2 years before 2008. And I knew what was going to happen. And my best friend used to work at Countrywide. And we would send them the loans to approve, and they would approve. And I'm going like, how can you take this on your books, man? This is garbage. This is default city. But then I didn't care, because if I didn't do it, somebody else was going to do it down the street. My point in all of this is, in 2008, we had a great chance to end the musical chairs properly. But then we said, too big to fail. We had a great chance to do it, clean up the system. We didn't. And now the bubble is so much larger, but I don't think we can allow the bubble to blow up. We have a horrible fiscal policy in this country, 38 trillion debt in another 25 days, I think. We have a horrible fiscal policy, because that follows horrible. I mean, monetary policy follows fiscal policy. I mean, people blame the Fed, like Trump blames the Fed, but the Fed cannot do much about it. Plus, Fed cannot control the long end. They can only control the short end. So, I don't know. But the point in all of this is, we never cleaned house. We had banks that were doing super risky loans, and they would just send it. And we know what happened with CDSs, and we know what happened with, they packaged it, sold it all over the world. Wall Street got rich. Nobody went to jail. There was some fraud in there for sure. That movie, very accurate, The Great Short, right? The Big Short. Look, it's going to happen again, because what happened 2008, right? We had TARP. See, this is all history lessons. The Toxic Asset Repurchase Program. How much did that cost the taxpayer? 800 billion. So we went to JP Morgan, we went to B of A, we went to all these banks and said, you guys have to take all this garbage and put it on your books, but don't worry, we're going to back you up. We never allowed things to go out. If you're running a business and you're not doing a good job, you shouldn't be allowed to live. This is nature. Dog eat dog. What they did is they put all the shit in the Fed books, because Fed, by the way, is not supposed to have a book. I mean, they're just there to regulate interest rates and a little bit, I think Fed book is still 6 trillion. They cut it from 8 trillion to 6 trillion. So when you went to the Fed in 2008 during the great GFC, you said, I have dirty underwear, I want to use that collateral. Fed goes, yep, there's the money. Well, that's when all the trouble started. And that's when I woke up. I go, wait a minute. They're never going to allow too big to fail. They're going to just print, and they're going to save. They're going to print. Where's that money going to go? It's going to go into the system. Look at M2. It's going on a 45-degree angle from the lower left to the upper right ever since. And then we, every 10, 12 years, we have some sort of black swan thing going on. Well, although the 2008 was definitely man-made, no question about it. I mean, I was in it. So, and then 2020 comes around, pandemic shows up. How much money did we print and spend to save the economy during the pandemic? So 800 billion, by the way, was the cost of TARP. And I thought that was some ridiculous amount of money in 2008 dollars. But think about this, how much value the dollars are losing. 2020 comes around, 7 trillion we had to spend to save the economy. Trillion with a T, right? And then the next one, because we let the bubble keep just growing. And that's why I'm answering your question. All asset classes correlating and being at an all-time high is not a coincidence. It's not a great thing, because that's a bigger bubble. But we will not allow the bubble to burst, ever. Because next crisis, next black swan, okay, so it went from 800 billion on TARP to 7, 8 trillion. Next one's going to be 20 trillion. Well, that's why gold is seeing. That's why, the market cannot go down, because it's all that money is in the M2. It's coming into the, it needs to get a return, and it chases it. That's it. So that's why pricing things don't make sense whatsoever, because too many dollars out there. But then when there's too many dollars, the value, it's just, this is supply and demand things, tomatoes, potatoes. When there's too much of something, the value needs to go down. That's why dollar is losing its value. But now we cannot, I believe we cannot. That's why I think I'm very bullish on Bitcoin. I'm very bullish on Ethereum. I'm bullish on the market. I'm bullish on gold. Been bullish. Been talking about this in my private circles for literally since 2010. Because I figured, oh, this is what they're going to do. Okay, how do I protect myself? Okay, I go buy real estate. I go buy, gold. I go buy stocks. And then that's what you have to do. You have to protect yourself. I mean, that's the game we're playing. And I truly believe they cannot allow it to end. If they do, it's just going to be brutal. It is going to be in 1929. I don't think it's my lifetime, though. I hope it's not in my lifetime. Let me pass on my shit to my kids and then die and then do whatever happens. Hopefully. Like, I'm 57, going to be 58 in March. I'm not expecting to get Social Security either. I was hoping to get some money. Sergio, when would you say is the best time to do leaps? There is no best time. I mean, leaps are a cheaper way of participating in an equity that you think is going to do well over long periods of time. Leaps, although pricing on leaps are very reasonable these days, as opposed to short-term stuff. So you can do poor man cover calls. You can buy leaps, sell short-term calls against it, all kinds of things. Again, I'm 100% against cover calls. 100%. Okay. Cover calls that's what I'm trying to do with my mentorship in my group. I'm going like, that's like picking pennies in front of the bulldozer. Stop effing around. Don't do FAFO. If you're committed, if you believe a stock is going to go double, there's no reason for you to sell cover calls. None. Okay. Okay. Let's do this. You bought Rigetti at 50. Okay. And you sold a cover call, even weekly cover call. It took them $2 for like 3 days. Great. Stock is 41 today. How's that going to save your ass? No, don't do cover calls, especially if you're committed on a good fundamental story. Well, what would you happen to you if you sold cover calls on Palantir? You'd be crying. Stock went up 20x while you're in the money. You're rolling. To do it with credit, you have to now go out 2 months. Oh, you're in the money again. Yes, you're gaining the capital appreciation, but then now you're in the money. Okay, now I have to roll again. Now I have to roll again. Now I have to roll again. And then pretty soon you have to roll out to a year just to do it with a credit, hopefully, because the acceleration of the stock is so fast. So don't do cover calls. Leaps, yeah, leaps are all right. I mean, they're a cheaper way of participating in an up move. I'm not going to say exactly stock replacement, but, there's no timing. I mean, look, if you think the stock is going to go from, I don't know, 20 to 50, there's no harm in buying leaps. I mean, depending on the premium, obviously, but if you're going to buy, at the money, you're going to pay a ton of premium, but I think the premiums are actually reasonable than before. So there's no, that's the way I answered that one. Muted says, Sergio, what is your cash position sizing? How do you adjust how much you're holding the sidelines, and do you have minimum threshold? Good question. No, at the moment, my cash position is about 85%. I only have 3 positions on. I closed one with a loss today. I have 2 intermediate positions, 1 long-term position, and in my trading, that's my trading account. If you're asking me my investment account, I have 4 stocks in there. I'm going to add another one. I bought Google during the April crash. I got lucky, and I wanted to buy Google even before then. I paid like 150, 152 for it, so that's done really well. Still holding. I bought Unity Software about 21, sold it with a double. I didn't want to sell it for tax reasons, but then actually doubles I'm going to take. I was in Nike again, got lucky. Nike has been a dead stock for 5 years, 6 years, 8 years. I don't know. I got lucky. I thought, okay, enough bleeding. I paid 53 for it, sold it in the 70 range, and I switched it to Lulu. That's number 3. And I have Kava. So I have those 4 stocks. Kava, I'm about even. So on my trading account, so on my investment account, I'm about probably 60% invested, still hold 40% cash. I always hold investment trading account. The cash position varies widely. Like I could be all in for like a few days and then just trim, right? Scale in, scale out. At the moment, that's my position in my investment account. In my trading account, I think I'm about 86% cash after what I did today, right about 86%. And but that varies wildly. But my rule of thumb is in my trading account, again, it's a 6-figure account. It's not a small. I mean, it's small to some people, but not for me. I'm having fun with it. I allocate maximum. Depends on the setup. If it's a weak setup, probably 5%. I don't use margin. I played that game before, and don't do it. Look what happened last Friday to all these 50x fart coin buyers. I'm like, what the fuck is going on in this world? And then they complain on Twitter. Oh, I lost everything. Good. I just said it. Good. Oh, I'm 30. I lost $1 million. Good. You have 30 more years to make it back. Because if you go 30x, 40x, 20x on some garbage and you got liquidated, tough. Who told you to go 30x on Fartcoin? That went from 60 cents to a nickel in a matter of an hour. and you got liquidated. I have zero remorse. Zero. Okay. And to me, it's like, buyer beware, man. But that's what this market creates. This market creates fantasies. Fartcoin or Pepe or some other shit. I'm like, what are these things? Are they even worth the paper they're printed on? What's the tool? What are we doing here? Right? It's gambling. So that's my cash position at the moment on my trading, but it could change. It changes daily. It could go down to 50%. But my two rules of thumb is depends on my setup. If I have a really great setup, like we had a great setup on NUGT, we got out early, but that was a great one. Then I allocate maybe 15%. Now, 15% on a six-figure account, and I mostly do derivatives through options. I don't do the underlying. That's a lot. You can put on like a really, really amazing synthetic on or leverage position on. Obviously, there's downside, but then if you have a great setup that's a breakout or whatever, that's the chopsticks part of me. But if it coincides with the thesis, so the way I look at it is I have a thesis. I don't create it. I do create a thesis, but the thesis is based on facts. So the facts have been gold is going to go higher, and NUGT, which is the ETF of gold miners, is going to go higher. Okay. How do I participate? Okay, I'll put on a synthetic. I sell puts, I buy calls, or I sell put credit spreads. I buy call debit spreads with that money. So turbocharge it, the upside. So there's many ways I structure trades, right? So I create the thesis. Okay, they're printing money. All asset classes are going to go higher. Okay, cool. Gold is going to go higher. Okay, what do I do? Once I have the thesis and it's based on what I've understood, I structure the trade. Then I make sure the allocation is correct. And then once the allocation is correct, then it's up to market gods. What happens after that? I can't, I mean, probabilities are with me, but sometimes not. Fed panics and aggressive rate cut. Well, 2020 QE outlier because it was due to the pandemic, right? I mean, the economy was at a halt. Everybody's at home. We are on 75% of our GDP is consumer spending. I mean, everybody's at home, not spending. I mean, we're literally we've just gone off the deep end here. But what I'm saying is that the difference between 08 and 2020 is 12 years. In 12 years, we had to spend 10x the money we spent to save all the banks, all the shit banks in the country in 2008. This one, it cost us 10x. Next one's going to cost us 10x too, probably. That's why all these asset classes are going to go higher and higher and higher, because once that money comes into the system, they don't take it out. They leave it there. You know what I'm saying? Again, please go check out the M2 correlation. Superimpose SPX over M2, superimpose gold over M2, superimpose Bitcoin or Ethereum over M2. You guys will understand there's a very strong correlation between those things. And that's the correlation I follow. Because when the M2 starts going down, that means the Fed is taking money out of circulation. And that's what happened in 2020, when the inflation got out of control, 2021, 2022. We started raising rates from 0 to 5% real quick. That was a real quick interest. What happened to markets? Ate it, right? That was as grinding as a bear market as you can see, and a lot of people died in that. Actually made money in that. But my point in all of this is, look, you have to play the probabilities. You have to pay attention to what's going on to macro. Again, you can't day trade with macro. I understand it, but you can definitely position trade with macro. You can also swing trade with macro. I mean, depending, sometimes I hold things for a month or two, but a macro, to a point. But I do pay attention to macro because, again, believe it or not, most stocks don't move on their own. If the market's not supportive, general market conditions, your stock's not going to go up. And if you look at the advanced decline line, and then all the talk out there, these 8 stocks are just pushing the markets out. Yeah, they are, right? But it also goes to show how valueless the money is these days, right? When an NVIDIA is $5 trillion market cap company, is it deserving? I'm sure it is. But you guys understand, right, how dollars are not worth shit, okay? So, again, I'm not saying NVIDIA is expensive or anything like that. Yeah, Fed is always behind the curve, though, always. They were way behind the curve raising rates coming out of the pandemic. What they say, more gaslighting. I'm going like, you guys need to raise rates, bro. What they say, oh, inflation is transitory. You guys remember that? Janet Yellen and Powell. Was Powell around? No, I don't think Powell was around. No, who was around? I don't even know. I don't even pay attention to these things. The Fed chairman kept saying transitory, transitory. Now they're saying tariff inflation is transitory. I'm going like, who are you guys kidding, man? I ain't buying it. I'm not listening to a word you guys are saying. Oh, FYI, by the way, you guys still notice that the government's shut down, right? Right? Is it working? Is the country functioning? Looks like it to me. Hey, Washington, go F yourselves. Oh, they're getting paid, though. They're getting their paychecks, by the way. And their health care. So the country is working out real fine. I don't miss him. You guys miss him? You guys miss your senator or your House representative? I mean, why do we need these people? Country is working perfectly good. Local governments are fine. 911 is working. I don't know. I don't know, bro. Oh, this is my rookie right here. He's doing his MBA. He's thinking of quitting school because he made so much money. Bro, when I meet you in New York, I'm going to wring your neck. Seriously. Don't fucking do any of that shit. What are we shorting? I like shorting. What do you like shorting? Is that because things go down 3 times as fast as they go up? It's called gravity, bro. Yeah. Oh, good question. What's the greater fool theory? Excuse me. Like it was in 2000 dot-com bubble. That's when Mark Cuban sold his company for $6 billion. That's what otherwise Mark Cuban wouldn't be anywhere. Greater fool theory is you buy a stock and for what you're paying, you're a fool, but you don't know you're a fool. And then the next day, somebody comes and buys it from you at a 10% higher clip. That's the greater fool theory. There's always another fool to buy from you at a higher price. I was on the desk. We were chuckling at these prices. They're just .com. You just put a .com behind, just like today. When they put an AI behind something, parabolic. Cool. Or when they put quantum, parabolic. I'm like, cool. Oh, when you put AI data center, parabolic. When you put AI data center energy infrastructure, parabolic. I'm like, okay. So I'm sure, traders are laughing. So we were laughing. I mean, we were a profit center, so we're going to front run you anyway. But we'd be like, should we even hold this inventory? Because I mean, I was like, do we take our half a point on 2 million shares and move on? Because I was like, this can't go on. We were 300 of us. It's like, I'm running the desk and I'm like, you guys have inventory? He goes, we're just selling as fast as we can. We're just buying, it's like today, high frequency trading, right? But then we're down to pennies now. Those days we're talking quarter, half points. So I'm like, how could this go on? And every day, I thought we were dead at NASDAQ 4,000. It went to 5,000. It went 8 more months than I thought was the top. I'm not going to question it. We're buying and selling. But that's the greater fool theory, that somebody's going to pay a higher price for it the next day. And it did work like that. But out of the blue, no warning, when it ended, it was a real sharp 20% correction. NASDAQ did. Go look at his study history. Go look at a NASDAQ chart from 2000. And then within the next year and a half, 2 years, NASDAQ got cut by 90%, 80%. And all these stocks, the dot-commers, went to zero, out of business mostly. And I'm not saying that's what's going to happen now, because we didn't have that kind of money supply before. We didn't have any of these things. We have different things now. We have different market, different time, different people. But then humans are still human, right? We have emotions. But that's the greater fool theory, sir. All right. It didn't help. It didn't help. Because I'm telling you, my orders were ready. I'm up at 2 in the morning. S&P down 90 handles. NASDAQ down 400. I go like, okay, where's my basket? Where's my hands? You know, by the way, I was on the pits. When you do this, your hands this way, you're buying stuff. I was like, okay, I'm just going to open it up and let it fall. And none of them got done. None. And I'm like, F this. Make a cup of coffee. I'm like, look, man, you miss trades, but as a trader, you have to look forward. You can't just look back. You have to have golfer's memory in trading. What's a golfer's memory? You go hit the ball in the water, and I'm like, it's okay. The next shot. There's always the next shot. Because if you keep harping on that, the missed trade, or you didn't take a loss, or you had a loss, you came back to even, you didn't take it, now you're deeper loss. These are all experience things. You can't learn, you can't teach experience. But I can't look back. I go, okay. And it was an amazing trade. It was the double already, like in 4 hours. And I'm like, okay, we missed it. It hurts. But then until somebody like him reminds me, I'll be like, oh, okay, whatever. Yeah, you have to have golfer's memory in this world. I mean, it could be other things, like short memory, basically. Basically, to short circuit your short-term memory nodules in your head, because then you're going to be stuck. What if I should, could, would, should, they ain't going to get you anywhere, because then you're going to be blinded by rage. Oh, I missed this trade. And then now you feel like you're trading. I got to do something. I'm like, I didn't do anything today. Actually, I closed the losing position. I took a loss. I added a little bit to another position, and I was like, I took a profit. I was long RGTZ. Whoever brought that, like at the top of RGTI, thank you, sir, madam. I mean, they gave me like a little face rearrangement on RGTI short shares. And then the 2X ETF came out, the inverse ETF. I mean, that was great. I bought that thing like 8, 9, 10, sold it at 11, 12, 13. I'm like, okay, cool. So I got my money back out of the RGTI alligator. Because my group was thinking like, this is a tough alligator, sir. He's going to eat your fingers. I go like, yeah, sure did. I lost like 4 fingers. And then I took the alligator's eye out and then got deep and took my fingers back out of the stomach. So, yeah, like they're all like amazed. Like yesterday on the chat, I put up like, I want to short gold. They go like, are you nuts? I go, yeah, I want to short gold. Or what's better, NUGT. And then, in fact, my rookie right here is my rookie. And then he goes, how about dust? I didn't even think about it. See, that's why I love my group. We all come up with ideas. Like, I don't know something, somebody puts something up, anyway. If you want to join, it's a great group. By the way, Janice Shaw, if you're watching this, please send me an email, sergio@sergioavadian.com. You're our first female member, and we promise we're going to behave, because we're running at the moment at a locker room, trading desk kind of an attitude. But if you do show up, we're going to behave. We're going to respect, okay? Unless you're like one of those females, like cusses like a drunken sailor, then we welcome you with open arms. So send me an email, sergio@sergioavadian.com, because you became a member. I want to send you the Telegram chat group link. I have like 2-3 members who haven't done it. So if you guys are watching this or watch it later, please send me an email so I can send you the Telegram chat group link. And in order to be a member, by the way, you click join, and then you email me, sergio@sergioavadian.com. Join is on the YouTube page, by the way. And then I'll send you the Telegram chat group link. Yeah, so you said it. He came up with dust. I go, okay, we'll just go by some November. And he questioned me on something. We know what we're talking about here. And he goes, F, how come you're always right? I'm like, it's not about right. It's just, I've done it like for 30 years. I should know this stuff. Anyway, he goes like, we go buy some calls on dust. I put in orders. I put in 50 lot orders, 70 cents, 65 cents, 60 cents, and 55 cents. These are November 10 calls. NUGT's trading at 8.5 in after hours. Lower yet. I'm like, these are the prices because I have a pricing tool, right? There are free ones out there. You just put the price in. It puts the IV in automatically. You put the days to expiration, strike price, and all that stuff. And then it gives you the projected or implied price for tomorrow at that stock price. I was like, okay, those were the prices, 65, 70, 65, 60, 55. Okay, I'll buy 200 lots. I'll put out, I don't know, $12,000. And they're already like $1.30, I think. So didn't buy it because when the sell-off happened in the morning, overnight, NGT was selling off. I'm like, so we didn't do it. What can I do? But don't look backwards, my man. Always look forward. SOFR printed 429% yesterday. Way to discount window. Funding stress is there. Go look at some of these regional bank stocks, right? Zion's Bank and go look at Jeffrey stock, right? It's bouncing a little bit today. You know, yeah. M2 equals massive. Massive. Well, we have 38 trillion in debt. So we have to, because we take in 5 trillion. The Treasury takes in 5 trillion, and we spend 7.5 trillion. Where's that money coming from? Right? The difference, the gap, the deficit. Because these people who have been government shutdown, right? They spend our money before we even send it there. I mean, they haven't seen a dollar they don't like. So I'm like, 2.5 trillion. Where's the money going to come from? Print. Print, print, print. That's why asset classes keep doing this. And then it comes into circulation. That's what it is. That's why the musical chair doesn't end. Yes. Not just the Fed. All government agencies. All of it. CIA, FBI, they're all gaslighting. But Americans are used to it. Americans are simple people. They're used to it. Yeah. Yeah. I mean, he has like, he goes like, I mean, I love the kid, but he goes like, the only time I can trade is in my boxers. I go, there has to be decorum. We can't trade in my boxers. We need to get out of boxers. We need to put pants on. We need to do this seriously. And then he goes, no, I YOLO in my boxers. I'm like, new generation right there, Uzi. I don't know why you're laughing at, but I hope it's funny. Anyway, let's go to some positions. I yucked enough today. I like these kind of sessions, impromptu. Say what's in my mind. It's my therapy. It's better than paying some shrink like $150, $200 an hour. Although I highly recommend, you all should have trading coaches if you can afford it. So they don't let you get it. It shouldn't be your wife, by the way, or your girlfriend. It has to be someone that's a trader, but also a professional. Okay, like a psychiatrist. I've had the same one for 25 years. Periodically, I do like a little refresher because he knows the way I trade, and then he's a trader himself, and he'll be like, "What is happening?" And he'll like my break, basically, because sometimes I go out of control. Even at this age, I'll be like, "What is happening?" And he goes like, "Oh, your allocation is wrong. This is wrong. That's wrong." But not just being negative, reality. Because when you're in it, you don't see it. Somebody has to tell you, like, what are you doing? It has to be somebody you respect. Not that I don't respect my wife, but I don't think my wife has a clue of what I do. I mean, she does because the bills are getting paid, but I don't think she has a clue about trading or stocks or whatever. The point again is, you need to have I like, or if you can't afford one, do like a diary. Seriously, like take out pen and pencil, do a daily diary, and then on weekends spend half an hour going back visiting what you messed up, what kind of trade you did, why did you do it, how was the structure of the trade, if it went wrong, did you close it, you know, all these things. Those are very helpful for traders. I highly recommend it. Let's see how much money we're losing today. I don't know. I don't think we're losing that much, but we're losing because I'm in three. It was three, now down to one. That's digital asset treasury companies. Again, you chopstick people on X, on BMNR, SBAT, and whatever else you do. Actually, you know, I'm having fun today. So here you go. Here's the link. I would like one of those people to come on and say, "You're a dumb shit, Serge. I draw lines because I feel like it." I'm not against lines. Yeah. But BMNR and SBAT and all these are not going to go to MicroStrategy. None of these are going to move on their own. There's a dog. That's Bitcoin, Ethereum, and Solana. And these are the tails. The tail is not going to wag the dog. Unlike zero DTEs wagging. Zero DTs are so big now these days on indexes that they're wagging the dog, actually. They really are. But on these stats or treasury asset companies, if Ethereum doesn't go up, BMNR is not going to go anywhere on its own, or SBAT's not going to go anywhere on its own. So that's that. Let's look at what we get. Actually, I mean, oh, wrong one. Yeah, we're green. See, there you go. No problem. None of that overnight thing happened. Unbelievable. Look at this thing. And today's MVC is, according to one of my members, 6,700. So they may push this thing to 6,700 on SPX. Yeah, we're at 66.62. He said actually there's MVC 6,700 when it was 66.20. We could have made some money on zero DTs, I guess. But I lost my fire at like 2 in the morning when I saw 90 handles lower. And I'm like, F this. Okay, what do we have? We have, well, luckily that's going to expire. We have, those are the loss that I took. See, I talk about all the losses, gains, all of it. I have a January 2027 position on ASST, which is buying Semler Scientific, which is Vivek's company. The darn thing is down to 85 cents. I don't have it, but I bought some call debit spreads. I bought the 5, sold the 10s at a cost of 27 cents. So 27 cents could turn into $10. Will it turn? I don't know. If Bitcoin goes to 250,000, maybe by 2027, it may. So it's a lotto ticket. I do these things once in a while, but I put up like, I don't know how much, 6-8 grand. It's worth it. So I'm long 200 of the January 2.5 calls on ASST, and I'm long 100 of the 5 calls, January 15, 2027. And I'm short, not equal amount. I will put them out though. I'm short 165 of the 10s against it. So it's a call debit spread. I should put out like another 95, taking some more money probably. So DFDV, DeFi Development, top Solana, that actually. I love the company. I thought it was a cash grab. I put it on a couple days ago, literally a couple days ago. Took in like 30 cents. I sold the 14.5 puts and bought the 13.5 puts. What is that called? Put credit spread. And it didn't work out. Stock went down to 13. So when it bounced to about 13.5 range, I closed it. I bought them back at like 75 cents. So I lost about 50 cents times. I had 55 lots. It's about a $2,700 loss. That's all right. But then it makes up with this MSOX trade, 40 expiring today. Put credit spreads. I was shorted the 7s, bought the 5s at a cost of 80 credit, 80 cent credit, and times 40, 3,200. So whatever I made on MSOX, which is the 2X ETF of MSOS, I lost on DFTV trying to do a quick cash grab. Well, you take a trade and you take your loss. Loss would have been a little bit less actually now, or I could have gotten assigned. I didn't want to buy 5,500 shares DFTV when Solana is breaking down, when Ethereum is breaking down. I'll do it again. Again, that's a DAT. So MSOX is on both sides expiring worthless, which is good. We pick up the whole premium there. I was long 34 or 3,500 shares of RGTZ. I think I was long about 970 range average. This is the 2X ETF of RGTI. They brought this thing out right on the top. Lovely. Well, not close to the top anyway. I sold my last 500 shares today. I don't know where I sold it. Let's see. RGTZ 500. I sold the last 500 shares at 1308. It's 1136 now. So I'm a good seller, actually. I'm a better seller than a buyer. High 1329, low 1113. This is the 2X ETF of RGTI. I will buy this back again. I will trade this. And last but not least, Sharplink Gaming. I'm long 2,000 shares at 1718. I was at 19. I had nice profits on this, but this is a longer term. This goes out to January 16, 2026. I am short 40 put credit spreads, 15 and 12 and a halves. And I was going to add it this morning, but when I saw the 90 handles, I was like, nope, I'm not touching anything. Although I did add 5 more lots to the calls. So I'm long 2,000 shares. I am long 40 of the January 15 calls. Stock is 14.18. And I'm short the PCS. So put credit spread. So I took in the money, bought the calls, long shot, obviously bullish directional position. It was working well. Now we're nursing a loss, obviously. But if you're a believer in Ethereum, which I am, not because Tom Lee says so. Tom Lee is again great, but don't listen to Tom Lee and go buy BMNR. Again. None of these are going to move on their own. What I follow is something called MNAV, which I talked about endlessly. BMNR MNAV 1.3, 1.2, premium. I don't want to pay a premium. I did trade BMNR when it was under 1 MNAV. MSTR above, but SBET and DFTV. DFTV is 1 MNAV. Actually, it was down to 0.85. I was short 15, 12 and a half per credit spreads. I took all the money out of that, actually. It was like, again, 55 lots, and I had taken in about close to 85 cents. So that was like a $4,000 or $5,000 winner. But then I went a little aggressive and went to the 14 and a half, 13 and a half for a quick cash grab, and it blew in my face. Well, then again, take the loss. SBAD, what I was saying is that SBAD at the moment, we're at 0.87 MNAV. So I'm like buying Ethereum at a 12, 13% discount as opposed to buying BMNR with a 30% premium. I don't think any of these things should trade at a premium. And it's proven. Proof is in the pudding. For example, strategy, right? Last time Bitcoin was 110,000. Strategy was $450 a share. This time Bitcoin is 110,000. It's 285. So you guys understand MNAV now? MNAV is getting crushed. So what Wall Street hedgies are doing are that they're buying the underlying, which is Bitcoin or Ethereum, and they're shorting these DATs for MNAV to shrink. Well, when it's under 1 already, I'm looking at it as a company relatively safer. Again, it all depends on Ethereum price. If Ethereum is going to go down, I don't know, 2,500. Where is BMNR going to be? It's going to be 25 bucks, 30 bucks. Where is SPEC going to be? 8 bucks, 9 bucks. That's why I put credit spreads on. I don't just sell puts. Because define risk downside. There is always downside, folks. If you think there is no downside, you're a fool. So those are the positions, 85, 86% cash. I'm looking to buy some shit. I don't know. I'll go through my watch list and buy some stuff when I need to. So those are the positions. Only 4, 3. Sergio. How do you recommend for someone younger with a small account? Yes. Yes. Forget losing, bro. Younger. Okay, let's say, okay, look, there's this thing called compounding. Actually, oh, may I? Now that you guys are watching. I just launched, not just 10 days, 2 weeks ago, I launched my brand new website. So I want to democratize and put out some correct information out there as opposed to some of these freaking YOLOers. That is not the way to do it, folks. Here's my website. Please go subscribe to my free newsletter. Actually, the first edition of the newsletter went out on Monday. Every Monday, you're going to get a free newsletter. Honestly, I'm not asking for anything. I'm just asking for your email. And I will send you a free newsletter. What is it going to be about? It's going to be about all these things I talked about today. Macro, micro, trading, investing mostly. I mean, most people don't even know what a stock is. The DCAing, power compounding, rule of 72, options, stocks, whatever. So you're going to get a free newsletter out of it. It's free. Seriously free. No, nothing. So go subscribe. There is, like, if you go to the website, there's a blue subscribe button. Just click, put your email, and then you'll get the next newsletter for free. But going back now, and I think I printed it correctly. That's my website, www.sergioavadian.com. Go check it out. I spent about 2 months on it. Spent good money on it too. But it's going to be like, we're going to add more things. We're going to do webinars. We're going to do all these things. Because I don't want to be like a Dave Ramsey. It was like, oh no, debt's bad. I'm like, no, that's good actually. I have a bunch of debt and I manage it correctly. But for you, sir, muted, you can have a trading account. I highly recommend for younger folks. Highly. Couldn't recommend more. Drip system. Okay, you got to drip it. You got to do a budget. Money's coming in from your W-2, whatever you're doing. You need to invest long term. If you're 19, 20, 22, 25. And I say this to a lot of folks and they cannot answer the question, but some of you, I'm sure they will. If you invested just $100 a month, and every Monday you went in and, every first of the month you put in $100 in your Robinhood account and you go dollar cost average into an index. And this is outside your peak earning years. This is outside your 401k. This is outside your IRA, SEP IRA, whatever you're doing for retirement, right? Social Security is not going to be there for any of you who are young today. So your DCA, dollar cost average. Passive investing will run circles around active investing any day of the year. My opinion. I could be wrong, but so far, not so. Market, and don't tell me market's high, market's low, blah, blah, blah. It's too high. It was too high like 2 years ago. It's higher now. For all the reasons I've explained, dollar cost average in 40 years, that $100 a month is going to turn into about $1.2 million. Now you're going to say in 40 years, 1.2 million is nothing. Correct. But would you rather not have 1.2 million in 40 years outside everything else you have accumulated in your life? Just with $100 a month. So please do it. If you do more, it'll be more. So get the capital from jobs, start investing long term. And then you can have a small account, mess around with Robinhood and whatever you're doing. I'm not against it. You will blow a few accounts until you learn, because you got to pay your tuition to Wall Street, to guys like me, and it's okay. Have some fun. But please, now that you said younger, invest. Invest. Dollar cost average every month. Drip, drip, drip. Power of compounding. Amazing. Okay? And then, there's a saying, like, time spent in the market is a lot more powerful and more beneficial and more efficient than time spent timing the market. I can do it. Very few people can do it. YOLOers can do it here and there, but then again, longevity, consistency, right? So, but please, yeah, muted. Just start investing, bro. Triple Qs, IWM, endless. There's dividend. Don't do dividends. You're young. Just do DCA, dollar cost average. Just let them. Don't look at the money. Don't look at the market every month. And first of the month, drip, drip, and then if you have extra, more drip. Because I have like an analogy about this. Like a lot of you just are like, I love coffee, but I make my own coffee. Not that I don't like Starbucks, but I'm not going to go pay $7 for a latte. I can make it as good as better. Or a cup of drip is $4. I'm like, no. So start cutting some of this bullshit. Invest. Dump it in there. Dump it in there. Don't worry about it. Market crash is great. You're going to buy it at a lower cost. Market runs. Okay, great. You're going to pay an average up. You can do that with individual stocks, but that you would be amazing if you catch a Palantir or an NVIDIA, because there are many of these things, right? If you're young, you have your peak earning years ahead of you, you can do it. You can do it with individual stocks too, but dollar cost average, bro. Don't worry about anything else. Trading is fun, but don't mix business with pleasure. Business is investing long-term wealth, long-term capital appreciation, and saving your own ass, because you're in charge of your financial future. Save your own ass. Nobody's going to save you. Unless you have rich parents, government's definitely not going to save you. So I tried signing up. I don't know if it's only my end, but it didn't go through for some reason. I think it's on your end, because I have already like a few hundred subscribers. You mean signing up on the newsletter? Or signing up to the members group? Or I don't know what you tried to sign up to. No, newsletter is functioning. Otherwise, I would have heard. So for all of you, please go www.sergioavedian.com. You'll learn quite a bit. Really? I'll check. But I haven't heard any problems. So when you go click on the blue, there is a drop-down menu. It says newsletter. And then when you click on newsletter, a window pops up, right? So you just put your email address in, and there is a check mark on the bottom left that you need to click. So if you did all that, you should not have any issues. But then thanks for letting me know. I'll go check with my website manager. I'm not technically adept. I don't do any of this stuff. So anyway, so let's go to run some charts. Okay, let's take this off. Let's see what's going on. Yeah, we're getting closer to 6,700. David, you are right. We should have bought some 0DTs. Oh well, shit happened. Let's go to big charts. Here's the SPX. I don't know what we're doing here. This looks like a little, again, chopsticks, right? Big down day. This looks like a bear flag. And then this morning, if they opened 90 handles lower, it would have taken out the 50 EMA. See, I know as well as anyone when it comes to chopsticks. I mean, look, I'm not making fun of these folks. Look, technical analysis is one form of analysis, except that no indicator is future telling, and it always tells you what happened in the past, and then you're depending on patterns repeating. I mean, look, is there value to it? Probably. Is it as important as it used to be in my day? Probably not. But then, look, a lot of people, they do technical analysis. They draw lines. You guys notice lines on my chart? I don't draw lines. I like naked charts. I have Bollinger Band, the price, obviously. It's not, by the way, candles. I'm not into this shooting star and whatever. I'm the old guy. Bar chart is fine. I have a 20 EMA, 50 EMA, 200 EMA, Bollinger Bands. On the bottom, MACD, I like it. Shows me a little bit more of where momentum is going at. Yeah, those are the things I have. I mean, I don't draw lines. Naked charts are the best. So let's look at some of these nosebleeds and then how much they have improved already. What is happening to HIMS today? So this is an untradeable stock for me at the moment. I mean, look at this thing. Makes a reaction high above 60, gets to 65. Today we're at 50. This is 2 days ago. How can someone trade this? I don't know. Because on this breakout, you would have bought it, right? Okay, chopsticks, technical analysis, right? It's a breakout. Close above all this resistance. Next resistance, all the chopstick guys are saying 70. I agree. We're at 50 today. Yeah. So now this stock held perfectly the 200 EMA twice. It held support down here. See, I know what I'm talking about when it comes to chopsticks. But now we're like breaking support. So do we do the opposite of what happened here? We just go, when it's breaking support, we buy it because we know now they're going to wash everybody out and then take it back up. I don't know. I can't trade HIMS. I have no idea what the fuck is going on. Okay, so let's look at some charts. Apple up big today. That was down 3 when I woke up at 2 in the morning, by the way. These are all 1 year, 1 day charts, folks. So again, no lines, 20 EMA, 50 EMA, 200 EMA in the Bollinger Band. Looks like consolidation. Looks like it wants to go higher. Anyway, let's look at SPX. SPX. We're literally 1% from an all-time high. I mean, although we're a little bit of a precarious kind of a pattern we're building here. We had a massive sell-off last Friday. You guys recall, right? China tariff musical chairs continuation. Every bounce has been sold into, which is kind of odd. It gives me like a little tired look. MACD is actually on a sell, but still above 0. So I'm curious. I will go with the flow though. I will buy some puts or short some futures if I think we're selling off. Just not a hedge, but directional. Here's a stock. Okay, here's one. Look at this thing. It's called ABAT, American Battery Tech Inc. Here's a stock. I love these types of patterns, by the way. Right? It broke out about 2.5. Again, technical volume is pouring in now. It goes from 2.5 to 11.5 yesterday. Now today, day before yesterday. Today we're at 485. So if you bought that, what cover call is going to save your ass? How are you going to survive now? That's why when people go like, oh, these parabolics, so it's wonderful. I'm like, yeah, there's a parabolic right here. Perfect example. And how did it end? In tears. Bunch of bag holders. So that's why I don't like participating in there. And I like sitting on my hand. Same thing happened with Archer, the eVTOL company, right? Now it's pulling back into support. Maybe I'll give it a crack. All these have 2x ETFs, by the way, but MACD is about to give it a sell. This made an all-time high at 1462 2 days ago. Today we're at 1125. See? You get nailed with one of these things. Oh, it made a new high. Right? Okay, technical analysis, bull flag, new high. We buy it. Nope. So, yeah, folks, yeah. I like Affirm quite a bit, actually. We're pulling back 200 EMA. Not my favorite chart, but momentum's coming out of it quite a lot. But then last earnings report, this thing is 100. We're down to 68. 200 EMA is about, I don't know, 65. So we'll give it a crack there with a 2x ETF. 2x ETF of AFRM is AFRU. AMD, I mean, we had this ridiculous trade on AMD. Members made stupid amount of money. I think one of them still in there. Yeah, what is there to say? I mean, $1 trillion companies gapping up 50 points, man. I don't know. I have nothing to say. Here's another one my members caught. I didn't catch it, man. Well, he was in it. I think he's still in it, but he has cover calls at like 23. Stock has got to 40. That's why you don't sell cover calls. He caught this at 13 on a pullback to the 50 MA. Amazing trade, really. Congrats. And it goes from 13 to 40 in 1, 2, 3, 4, maybe a month. And these are not normal, folks. Stocks don't move like this, okay? So here's one of the quantum nosebleeds. Yeah. So how are you going to deal with that now? Okay, go deal with your cover calls now. Okay, stock goes from 25 to 62. Literally 62 2 days ago. Hit 38 today. How do you deal with that? You have stops, okay, maybe. But a lot of YOLOers, see, a lot of these newbies, they're going to go, oh, no, it's worth 300 because they compare it with like Palantir, right? They go like, oh, look at Palantir. There's Palantir. It's consolidating. It's probably going to break out and go to 200. I have no doubt. Or they compare it to Hood. I'm like, no. Rigetti or ARQQ or IONQ. They're not that. You guys see all my labels, my short attempts. But at least I made some money with RGTZ. Yeah, that thing went from broke out right here. Again, chopsticks helped on the breakout. This company doesn't have a pot to piss in, by the way, but it's okay. It's worth about, it got to, at the top, it got to 20 billion market cap. It went from 16. Okay, that was 9/12. September 12th to October, literally a month. 20 trading sessions. Okay, got to 58. And people think this is normal. And then from 58, overnight tonight, it got down to 41. I saw it at 41. Now, a lot of people say, oh, Rigetti is worth 200. And you know what? Actually, the perfect example of that is Open Door, right? Okay, there's a lot of YOLOers in this. 51 cents, goes from 51 cents to 11 almost. Now it's consolidating. I do believe this is going to go higher, but it needs a little bit more sideways action. So it did the same thing here, pop up. I couldn't, every feed on my X was about Open Door. And the YOLOers logic was the new CEO, who came over from Shopify, he doesn't have a salary. He has to take the stock to 82. He has $1 billion RSU package. They go, it's going to go to 82 because the CEOs, this is a shit business, by the way. They have no earnings. They have nothing. Again, I'm not talking shit about it. I'm just saying. They go like, CEO has to take the stock. First stop at 30. Stock is 7, folks. First stop at 30, then 82 in a couple of years. I'm going like, okay, that's all I can do. That's greater fool's theory right there. You know, here's another one. Bloom Energy. I was on the stock at 20. I traded it, and a lot of the members right here on the breakout. I was at 20, traded it. But when it started doing this parabolic thing, I was like, I'm not familiar with this. I cannot do this. And sure enough, it got nailed from 87 literally to 62, 25 points in 2 days. And then it just decided to go double again from 61. That's why YOLOers are making all the money. And they are right. I haven't seen this. I can't do it. I mean, good luck if you guys are doing it. Congrats. My hat's off to you. Completely off to you. Here's BMNR. Here's the X chopsticks. You know, all they do is like they draw more lines. So a couple of them had this wedge. It broke out here, right? Oh, it's going to 80. I'm like, no. Now, if you want to draw lines, folks, on BMNR, SBAT, DFTV, draw lines on ETHA, which is the ETH ETF. If this thing, okay, ETH ETF goes from 36 to 28. That's 8 points. That's about 20%, 22%. Okay, cool. What has BMNR done in the last 7-8 days? Let's look at it. Oh, right here. 66, and today's low is 46, 20 points, 30%. Right? So Ethereum goes down 20%, 22%. This goes down 30%. So how come this didn't go higher? Chopstick people? BMNR broke out. Should go higher. Yeah. So that's another greater fool's theory right there. So unless this Ethereum goes, BMNR is not going anywhere. I do like, for some reason, I don't know why, but, Bull, Weeble, You know, the SPAC happened, went to 80, and then it's been just kind of dormant sideways. Although about a week ago, lockup expiration happened, had 175, 80 million share day, and then 2 consecutive 70 million share days. So about 300 million-ish shares change hands. I do like BULL because if Hood is doing what they're doing, BULL is not a Hood, obviously. But then between the two, if I were to buy something today, I'd rather buy Bull than Hood as a spec. Hood is an established company, but as a spec, I like it. And BULL has 2x ETF, by the way. It's BULG. I like all these 2x ETFs. BULG is the symbol. Here's another one. Blaze AI. See, I'm just giving examples of YOLO. BZAI. A good friend of mine works at Roth. He has a buy on it with a $10 target. Actually, stock did broke out on good volume. Now it's kind of pulling back to a 50 MA. I think I will buy BZAI about 480 range. Kava, I'm long-term long. Coinbase, I think it could be reasonable with this pullback. I mean, it did pull back. 2x ETF for Coinbase is CONL. Yeah. Yeah, okay. Let's look at my strategy. You know, perfect example of strategy, okay? Here, let me explain this MNAV thing to you guys in pictures, because pictures are worth 1,000 words. Okay, let's take a look. Let's look at IBIT, which is the BlackRock Bitcoin ETF. Okay? Yes? Yes. Let's look at the date when MSTR or strategy, Michael Saylor's company, who's doing this. Okay, so let's look at this date at high, 543 a share. What day was that? That was 11/21. Okay, keep that date in mind, folks. 11/21. Now we're going to look at IBIT. We're going to look at 11/21. 11/21. Bitcoin was, well, IBIT. Let's go with IBIT. IBIT, but tracks Bitcoin dollar for dollar. So you can do this with Bitcoin as well. IBIT was on the same day, 21st of October, on November last year, was $55 a share. So keep those two numbers in mind. IBIT, which is Bitcoin's ETF, 55, MicroStrategy or strategy 543. Okay. Now let's go back to strategy today. Okay. Today. We're at 290. Okay. And where is IBIT? Now, all these chopstick folks on X will fucking understand. Where's IBIT? IBIT is actually 60. So on the 21st, we were at 55. So Bitcoin is about 10% higher, 10% than what it was on November 21st last year. Okay? Okay. 10% higher. Keep the 10% in mind. And MSTR was 543. Today we're at 290. It's down about, well, 50% would be 270, and we got pretty close to that this morning. So MSTR is down 50%. Bitcoin is up 10%. Now you guys understand how MNAV works. Okay? Because if you bought MSTR when Bitcoin was at, let's say, so if it's 10%, about 90,000, and today Bitcoin is 108,000, 10% higher, or whatever it was, you lost 40% plus on MSTR, and your Bitcoin would have been good. So that's what Wall Street did, or still doing. Because at that time, at 543, MNAV on MSTR was like 2.2. Now we're down to 1.2. Although Bitcoin is higher, MSTR is 40% lower. Now, hopefully you guys understood that. I hope so. Because that's another greater fool's theory. Oh, Bitcoin is going to go here. Bitcoin is going to go there. I'm like, I'm not sure. Let's look at a few more charts and then we'll go. Carvana is a good short, man. This piece of shit needs to die. Yeah, it's kind of rolling over. I was long Carvana for like a year and 5 months. I literally 4x'd it. And then it went another 8x. Yeah, I don't like Carvana. I want to short Carvana. I don't think they have a 2x inverse ETF of Carvana. But they do have CVNX, which I can short, which is the 2x ETF of Carvana. Ah, shit, I covered the FTV too soon. It's up 10 cents now. Yeah, you gotta take losses once in a while. Yeah, the dust call we made, which was the inverse ETF of NUGT. How much is NUGT down? Jesus, it pulled back to 20 EMA. Wow. 189 close, 155 low today. Holy shit. Wow. Boy, did I pick the day to short that thing. There's gold. Yeah, a little, whatever. There's TLT. This is this one you guys should watch. This is the 20-year inverse ETF actually. So if TLT is going higher, interest rates are going lower. Let's look at some more interesting nosebleeds. Oklo. Still holding. I mean, it's green today. I mean, I don't know. Yeah, this is the one, the little nuclear station company. I don't know. Stocks are not supposed to move this way, folks. You know, what else? Yeah, something's going on with today. They're bouncing a little bit, but with these regionals, look at what happened to Zion's Bank yesterday. They don't move like this, folks. Zion's Bank was down like 12% yesterday, and there's a bunch of them. If you go to there's a regional bank index or an ETF. HIMS is making a lower low. I don't know what the news is, but I don't want to be involved. Well, maybe I will be involved at some point if it gets to the point that I think it should get to. Here's IONQ. Martin Shkreli is short this thing. Now look at that. That thing actually is pulling back to the 50 EMA. I may even buy that thing. And 2x ETF on that is, there's an inverse one called IONZ, and then 2x ETF is IONX. Yeah, I think it's pulling back to 50 EMA. First pull back to 50 EMA, pretty powerful actually. Where's Rigetti? Rigetti, no, nowhere near yet. Yeah, you just bounce a little bit, you piece of shit. I'm gonna buy the RGTX again. Here's another energy company, IREN. These are all toppers, bro. I don't know, SanDisk, although a different group, but IREN, NBIS. Okay, yeah. They top. They're just getting distributed, but MACD's on sales. ASTS. Again, like ASTS at least has some revenue. Rocket Lab has some revenue, but the pullback last 2 days has been pretty brutal. Rocket Lab. But then people have so much room. They made so much money on it. Like the stock was $20. It hit like 80. I mean, if you get 4x, you have the whoosh on your side. You can wait, Here's Jeffries. That was death. Look at that sell-off. Something's going on with all these. I don't know what's going on, but something's going on. I think LAC, I may actually buy that thing now. Maybe a little bit more pullback. LAC is the one that the Trump administration's took a stake in it. It went from 3 to 10.5. Now we're down to 668. I think I will buy some of that. Maybe low 6s. I'll start nibbling on it. There'll definitely be a rally. Lemonade, I like quite a bit as a company. Chart looks like shit. Although there's a 2x ETF and that was LMNX. It's just consolidating before it makes a new. To me, it looks exactly like this kind of a move right here. Yeah, I do like the company. Yeah, I switched my Nike to Lulu. I don't know if it's going to die or not, but whatever. Yeah. MSTR is actually up. Is Bitcoin up? I don't think it is. Yeah, NBIS down 9. NVIDIA bouncing back. Oklo green, unbelievably. There are a couple of little ones I'm watching on DS. Yeah. See, 1177 down to 764. First pullback. I don't even know what on DS does. First pullback to $7 to 50 MA. I think we'll trade that for a point or two. You guys listening? My members? Oscar Health is another favorite on Twitter. I don't know. Still uptrending a little bit. I like this stock right here, PATH. I need more of a pullback though. Another one of my members alerted the group to this. The one parabolic hit 1874 down to 1534. I mean, as a technician, let's say, I laugh at myself when I call myself a technician. As a technician, pull back to a little bit under 15 would be really a viable bounce spot right about there. Okay, we'll pay attention to that. Palantir is consolidating before it breaks out, goes bonkers again. I mean, that's sideways action. That's going to end one way or another, folks. And when it does end, it'll be either, well, either way, I'll go with it up or down. Pony AI on the 20, on the 50 MA. I like these. This is the Chinese Waymos, by the way, and the other one is We Ride, WRD, down to 10. I like it. I like it. I like it. QBTS is another nosebleed. D-Wave Quantum. Out of all of them, IONQ, I think, is the first bounce candidate, to be honest with you folks. Getting down to the 50 MA. There will be a bounce here. Now, do you wait for the bounce, short it, or do you bounce, play, short, reverse, short? I don't know. I don't know. Good support at 60, though. I think I'll play that long for about 6, 8, 10 points. And then go back into IONZ. Or short IONZ. Just trade IONZ, maybe. Reddit, my members keep asking me. I go, it's in the middle of nowhere. It's breaking down. 200 DMA is coming up at 170. I'll take a shot at it there. Here's another one. Nosebleed. Rintech Robotics. All these stocks went parabolic. They're all pulling back. Resolve is another one we're watching. That's actually at the buy point. Yeah. We have charts. We have charts galore. We have stocks galore. It's just a matter of finding what you're comfortable doing. SoFi. Consolidating now. I actually made money shorting this thing. And then it ran. I mean, that's going to consolidate for probably a little bit longer. Tesla up 9. Holy shit. This is high level consolidation on Tesla, man. Tesla may be going to a new high, honestly. TSLL. Again, the slippage on these things, by the way. Be careful with these folks. You guys want me to prove what slippage means? Okay. Tesla last time was 488. Okay. TSLL. So you don't buy and hold these 2x ETFs. TSLL was 41.5. Okay. That's simple. And it proves my point. I don't have to do more. Tesla today. Tesla today is almost where it was back there. Okay. You guys remember that? Okay, right here. We're almost at an equaling high 480 range, or 430, 440, right? Whereas TSLL, it was 41. Oh, come on, Serge. Okay, 41, right? 41 at the old high, 41. Today we're hardly 20. This is called slippage. Why? A lot of people don't understand what that means. And a lot of people go buy and hold these 2x ETFs. No. TSLL ETF does not own a share of Tesla. They own swaps and long-term options. And every time they roll, you're going to lose. You're going to keep losing until you understand that these are not to be bought and held. But what do I know? UMAC is another one. They kind of went parabolic. Drone stock. If you guys have any questions on stocks, put it out. No, UMAC is pulled back. I'm not interested. Upstart is getting killed. Rates are going lower. And this is a AI loan company, actually. I mean, we're supporting this thing. See, now I'm playing chopsticks. 43, another 3-4 points. But this stock is like markets at an all-time high. Again, this is another thing that I want to preface. Outperforming and underperforming stocks. Stock was 86, cut in half while the market's making all-time highs. So not all stonks go up. Sometimes stonks go down. Anyway, that's some of my watch list. Hopefully we'll turn it green today. I doubt it, though. How am I going to turn it green today? I can't turn it green today. If I was patient with the short, I could have. Well, I sold what I needed to sell. SBT is rallying. I bought some, added to that. I don't know what else to do. Where is SOLT actually? I wanted to do a call debit spread on SOLT this morning. That's a Solana 2x ETF. Oh, okay. Maybe we can do that. Actually, that did rally quite a bit. The low was 1571. We're at 17. Let's take a look. Let's do like a cheapy 20-30 call debit spread on that. 250, 265. We buy the 20s because that thing moves. Solana moves to 210. This thing's going to be like 25. Sell the 30s. $1.38 debit. Yeah, $1.35 is probably reasonable. Why not? Let's start opening a position on that. Let's do 10 at a time. Let's put it at $1.35. It was as low as $1.15 today, that spread. Okay. We'll put the order in. There's the order. $1.35. Let's do some at dollar. Create duplicate order. $1.30. Let's do it every nickel in case we pull back. And let's take one up. Let's start at $1.40. Let's see if we can do it at $1.40. That's fair. $1.40 for $10. No, you fucking market maker. I hate you. I hate you. Hey, this thing is volatile. We may get it. You just put the orders in. 125. Every nickel is fair. On a 30-cent pullback, we'll get filled. Okay, cool. We'll start with 40 of those. So not much to do, man. I don't know. Boring day. Somebody said buy. One of my members said, should we buy more SBT? I go like, yeah, it's 0.88 MNAV. I mean, but we don't buy it because it's MNAV, because we just do it because of Ethereum. If we think Ethereum is going higher, then yeah, we do it. You know what I mean? This is Ethereum iShares. You know, all the chopstick folks are going to go like, oh, it made a lower low. I'm like, yeah, it could go to 200 EMA. Yeah, it sure could. Where's SPAC going to go then? It's going to go to like 12.5. I mean, not a pleasant looking chart, but then, you know, these cryptos, I mean, I don't know. I don't know how valuable or valid charting is on these cryptos. Anyway, let's see if you guys have some more questions, and then I'll go have a cup of coffee. Oh, okay, let's answer these questions. Really? Let me check that. Thank you for letting me know. If you filled the whole box, you should, but I'll check into it. I appreciate you. So maybe go back in an hour. I'll text my manager. Bro, that stock. I don't know. I don't know. I just don't do it. I can't do it. What did you think about MVTS shorting opportunity? Yeah, definitely. Doug, you know, these parabolics, Doug, they're just not friendly, man. Let's take a look. No, you're not. Now my members are like, oh, there's this thing called shorting. Oh, I can make money when things go down. Oh, yeah. Yeah. Stocks only. Oh, yeah. Yeah. It looks good, Doug. I mean, limited risk here. I don't know where it's going to stop, though. What was the 2x ETF of that? MVTX? Yeah. 40 to 178. Shit. I don't know what the news was. I'm sure there was some sort of catalyst for that kind of breakout with super high volume. 5 days in a row, stock traded 130 million shares. So it must be something. I would wait for a new high on this thing, Doug. You know, I don't want you to have my Rigetti experience on this. I do like the short idea, though. I don't even know how many shares they have. I mean, I don't know. I can look probably, but does this have an inverse ETF? I hope so. Is it MVTZ maybe? No. Nope, they don't have it. Okay, well maybe they'll bring it out. The other warning for me was they brought out this ETF, meme ETF. In fact, when it came out after hours, it ran to 16. I was like, okay, let's short this turd, and they were like, it was there for like maybe 10 minutes, and then now we're down to 9. This is all the meme stocks, folks. Oklo and Rigetti, all the quantum names are in here. So last time they brought that market top, by the way. You guys should understand that. Yeah. That's crazy. Okay, let's see. I like the short, but just be patient with it. You know, remember my 10-minute, 10-day chart? Remember the VWAP on 10-minute, 10-day? Starts rolling over like Rigetti did, then start pressing. You're not putting a PCS with Soul Play? I just did. I put 40 lots in. I put the orders in. I'm not going to chase it. You're not putting a PCS with... Oh, put credit spread? No, I'm not. No. I'm just buying call debit spreads. A little directional play. I'm not convinced Solana has bottomed yet. So limited risk downside. I'll put them on, though. Maybe not 1 for 1. So if I do 40 call debit spreads, I'll probably do 20 put credit spreads, or something like that. I will do it, though. But we bounced, though. I didn't know we bounced that much. It was 1570 low, and we bounced to 17. So that means Solana must have bounced. Next test of Solana at like 175, which it has to hold. Then I'll probably do it. No, the same amount, dollar amount, same dollar amount. No, I don't. I paid as high as I've been doing it every Monday all year because I bought it in 2020. Obviously, it's a lot lower than what it is, but it wasn't like that much because I didn't believe. I just kind of participated in it. But this year, I go for the rest of at least few years now. I said I'm on DCA every Monday, same dollar amount. I don't pay attention to the price. Dollar amount goes, BTC gets bought, take it out of the exchange, put it in my cold wallet. I don't leave it on the exchange either. F the exchange. God forbid. So anyway, yeah, that's what I do. Anyhow, no, I'm not doing it yet, but good observation though. See, even their lingo is changing. Shit, man, I'm so proud of you all. Yeah, this is interesting. This is an interesting company. I don't know if it's worth the hype. I mean, look, there's a lot of retail involved in this. Short squeeze. Yeah, there's a massive short position in that. There was a massive short position in Rigetti. There was a massive short position in IonQ. I gotta check check the short position on NVTS, bro. Because check the gamma situation, check the option flow. Like, if the market makers are not fully hedged, that thing is not going to go down. And I can tell just it's not going down. I mean, they could treat that as like, I don't know what they do. Do they do like some sort of AI data center power? Because that's the magic word. AI data center power. Even some dogs went up that way. Like, for example, we were long this one. Fuel cell energy. See what I mean? We distinctly were long at 4. We did like some sort of cover call or whatever, and then it broke out, and now it's pulling back. And like same thing with Plug Power, all these power companies, right? Bloom Energy. Yeah, look at that high level consolidation on Plug Power. But I'm just gonna go maybe nibble a little bit on BZAI. It's in the buy range. Nibble a little bit on Resolve. A little bit of an AI play too. Nibble maybe on open, or just go YOLO open, because there's going to be YOLO moment here coming up shortly. You know, if I were to draw lines, I would draw like this little channel up here, look like a bull flag, but I'm not going to do it. MACD is actually coming down to 0. And it's just like, it's on a sell still, but it'll smooth out around here, 0. Hopefully it won't go below 0. And then on the next level up, next leg up, this thing could run. I don't know. I mean, just trading, man. We just trade. What else is there? We just trade. There's nothing else. 1392. Mother. Should have kept everything as is. Fucking dumbass Serge. Excuse my language. Anyway, I'm going to go have a cup of coffee and then watch expiration. Oh my God, it's 12. I've been doing this for 2 hours. Didn't feel that long for some reason. All right. Oh, is it really? Gosh. It's holding too well, Doug. I will short that with you, but okay, you guys have an experience now how this works. It will end in tears, but maybe this company has fundamentals, unlike the other turds, Rigetti's and IONQs and Oklos and things like that. I'll look into it. Let's see if they have any earnings, if they have any fundamentals. I mean, if there's something to support it, with the short squeeze, obviously, we could go higher. So we don't want to get our face ripped. The worst feeling, by the way, folks, is you're short a stock, it's ripping, and the market's making all-time highs. That's the worst feeling. Anyway, much love to you all. Have a great weekend. I'm going to enjoy my weekend. It's been a long week. I'm just battling. I'm grinding. I'm talking. I'm going to finish with this. I have not grinded this hard for a decade, because I don't know if the market is, the tweeting and the overnight stuff risk is there. I'm just grinding, man. I don't think I had to grind for 4 years during Biden. You know, it was 100%, 120%. Last year, it's on the channel, by the way. You can go check it out. It's full disclosure. Account is there. Everything is there. Yeah, I don't know. I'm grinding. I'm trying to get to my number, but I don't know if it's going to be possible this year. Anyway, much love. My hat's off. My red hat, extra sauce, option expiration hat. We'll see you guys on Monday, Trading with Sergio. Please come back. Please go subscribe. Please put a thumbs up. Please refer. I think I have good information. I think I'm doing the right things. Subscribe to the newsletter, but then Muted says it's not working. So I'm going to go check into it right now. What's going on? So don't forget Muted. Just give it a shot again in another hour or so. Hopefully it'll be fixed by then. If it's broken, I don't know. I have to find out. But newsletter is great. It's going to go out every Monday automatically in your inbox. I don't want money. I don't want your phone number. I have nothing to sell you. I just want to educate you and inform you. And it's going to be short articles. It's not like, I know attention span is very short these days. People just swipe on TikTok. I'm just like maybe 500-600 word articles, minute and a half read about all different topics, because I believe education, financial education, is lacking from elementary school all the way to college. Proves it. Definitely lacking. They teach our kids everything at school except financial education, because you're in charge of your own financial future. You want to be financially free? Figure this shit out. You need to figure it out. Government's not going to give it to you. I am going to try, but I want to teach you how to fish. I don't want to give you a fish. I can feed you for a few days, a week, or a month, or a year, but I want you to fish on your own. You know? Crypto weekend. Lynn is here. What does that mean? Selling off? Should I get out of all my crypto? I don't know. Crypto weekend. What's that mean? There's something going on this weekend. I don't know. I probably don't know. But anyway, yeah, you're in charge of your financial future, folks. You need to take care of yourself. You need to start investing. Please going up. Thumbs up to that. I have some positions. I took a loss this morning, but then I think I have a full position on SBET. I'm short put credit spreads. I'm long calls. I'm long shares. Let's go. Let's effing go. Let's roll. I don't know. Hopefully. If you're bullish on ETH, do it. If you're not bullish on ETH, don't draw lines. Not going to work. Anyway, much love. Stay healthy. Be well. See you guys on Monday. Trading with Sergio, 10 a.m. Pacific, 1 p.m. Eastern. Subscribe to the YouTube channel. Put a thumbs up. Subscribe to the newsletter. And if it's working. And then you all have a great weekend. Enjoy the weekend. We'll be back at it on Monday. That's it. I'm done. Adios.